Welcome back. Well, we have listed on all the top stocks that you should be tracking. Prakash Diwan joins us to help us out with some fundamental analysis. Good morning, Prakash. Hope you had a good weekend. Well, let's talk about a couple of stocks then. Mahindra & Mahindra. First day, first show, 31,000 bookings, estimated at more than 8,000 crores. Wow, what a response to their EV launch. What's your view on the stock? The management was sounding very optimistic about prospects in the tractors business, and this gives it additional fillip. Your take.
Good morning, Nigel. Thank you for having me on the show. So I think, a lot could probably do with, the fact that the bookings opened on 14th February. And we just hope that not too many of them are promises made on Valentine's Day to be buying a new electric car. But on a more serious note, I think 30,000 plus is a very good number. It's just now that, the rollout will probably get very, very critical. The ability to manage expectations in terms of the waiting period is something which they'll have to do something about. And my sense is they possibly could ramp up. While they did mention 5,000 cars a month, they could probably push themselves to do slightly more. And that means that the turnaround happens faster and the retention happens faster. And what it does to Mahindra & Mahindra, it takes off a lot of burden that has been there on the balance sheet in terms of the investments they made to create this new platform for the last 18, 24 months. And in any case, the P&L has been showing signs of resilience and pickup from the tractor sales, as you rightly said. The other thing is that most of their sales are now coming from the premium SUV portfolio rather than the entry-level Boleros and all. So that is also kind of helping them out. But autos as a whole is something where there could be a lot of resistance from investors to buy into, given the fact that tariffs and all is becoming an issue. Of course, we really don't have much of exports from here, but there's always a sentimental, dilution that could happen on the sector post-April. But as of now, I think it looks very robust, and it could probably, not just today, but it could probably start inching up into a newer band of about closer to 3,500 from this 32, 33 that we saw last time.
Okay, that's M&M, and obviously this is a stock that Prakash has liked for many quarters. It's not a new call really in that sense. Prakash, I want to just stick to auto for a bit and talk to you about Samvardhana Motherson. We'll be speaking with the management as well a little later. The stock is some 40% off the highs. Numbers were, I think, okay, more or less in line with estimates. Margins at around 9.7% thereabouts. And we know that some of their markets are weak. International auto demand has been weak. But some brokers are saying that just the price is looking good now. It's all in the price. I don't know. Do you concur? And also, just tell us how one should be looking at some of these auto names that do have a very significant export focus, given all the tariff talk.
Yeah, good morning, Surabhi. So you're right. More than OEMs, it's the auto ancillaries that need to really worry about what's going to be unfolding on 2nd of April. Primarily, a lot of the businesses that rely on European exports have already been finding it very difficult to push volumes up. And if the US also, whether it's through Mexico or through some other jurisdiction, becomes difficult, it is going to be a big issue. Because remember, auto ancillaries, once they reach scale, it's extremely difficult for them to maintain margins if they don't utilize all of that capacities that they have built for OEMs. The other risk out there is I am expecting a big revival in terms of the interest globally from China, products from China, especially automobiles. Europe has been talking about reciprocal relationships and BTAs, so bilateral agreements with China, just for making sure that entry-level cars come to Europe from there, and they would sell the high-end Mercedes and the BMWs in the Chinese market. So there's a lot that could change in terms of shifts could happen in the market share. So auto ancillaries are definitely at risk. On Samvardhana especially, I'm sure the management, we'll have to hear the management in terms of their plan for the next few years. But the move towards greener technologies and supplying to green EVs and all of that is something which they'll have to do very rapidly, because conventional growth in IC engine, parts in IC engine is something you can't rely too much on. Most of the growth has come from acquisitions, and now it's time to digest all of that, consolidate all of that. So you'll probably go through a phase of consolidation in the business. I don't know about the stock. The stock would probably also reflect that same. But at this point, I wouldn't really get too excited to buy into it unless, the new plans the transaction plans start kind of getting very clear or crystallized very soon.